what's beginning in 2023 is going to be much worse. I mean, this is a much deeper financial crisis. But instead of a financial crisis, the Fed might trade it for a currency crisis and then a sovereign debt crisis, because they are going to just blow up, the money printing during this downturn. They've already started it. I mean, they basically returned to QE without admitting it.
Peter Schiff, the CEO of Euro-Pacific Capital and a well-known skeptic of Bitcoin's long-term value, shares his insights on the current banking failures and their potential impact on the economy, inflation, and currencies in this. Schiff's predictions include a further decline of the global economy that could have a significant impact on the already crisis-ridden U.S. banking system. Despite the Federal Reserve's reluctance to provide banks with direct cash injections, Schiff argues that inflation will inevitably increase as banks trade in their devalued securities for cash, resulting in taxpayers being forced to bear the brunt of the longest loan repayment period. Peter Schiff recently took to Twitter to express his views on the Federal Reserve's handling of interest rates and excess liquidity. According to Schiff, it's not just a matter of the Fed keeping interest rates at zero for too long or delaying its quantitative tightening QT policy. In fact, Schiff argues that any attempt to normalize interest rates or drain the excess liquidity with QT would have resulted in yet another financial crisis. By waiting too long to act, the Fed has only exacerbated the situation and made it worse. U.S. government regulations also encourage these banks to load up on treasuries and mortgages through favorable accounting, as Peter Schiff said. So, this whole thing was a byproduct of bad monetary and fiscal policy. Peter Schiff recently provided his perspective on the balance sheet of the Federal Reserve, stating that it could reach a new high by the end of the month. Despite the possibility of rate hikes, Schiff believes that they won't have any impact as inflation is set to soar to new heights due to bank bailouts. In his view, the bailouts will ultimately be the driving force behind the rising inflation, rendering rate hikes ineffective in combating the issue. To stay up to date with our latest updates, be sure to subscribe to our channel and hit the bell icon. This will ensure that you never miss any of our newest content.
But this latest round of bank bailouts is going to cause tremendous inflation, because where is the Federal Reserve getting the money to bail out all these banks? President Biden made it President Biden.
No, I think that's accurate.
President Biden made a big deal about reassuring the public that, the taxpayers aren't going to have to pay for this. Well, technically, I guess it's not taxes that are going up in the traditional sense. It's inflation that's going to go up. These bank bailouts aren't free. Right? And they're not going to be paid for by the banks themselves. They're getting the bailouts. They're not going to pay for it. It's the American public that's going to pay for it. But the way they're going to pay for it is through inflation, because the Federal Reserve is going to have to create out of thin air trillions of new dollars and add it to the money supply.
Yep.
It's going to give the dollars to the banks, and the banks are going to give the Fed their treasuries and their mortgage-backed securities. Except they're going to give the Fed maybe 60 or 70 cents worth of treasuries and mortgage-backed securities, and they're going to get a dollar, right? They're not going to get the market value for those securities, which is what we would get if you or I were dumb enough to buy U.S. treasuries, 20, 30-year treasuries a year or two ago when they were yielding 1%. If we were dumb enough to buy them, and then we wanted to sell them, we could only get maybe 70 cents on the dollar, or 60 cents on the dollar. But the banks that were dumb enough to buy them, they could get 100 cents on the dollar from the Fed. But the Fed doesn't have any money. Yeah, and the Fed doesn't have any money. It's losing money itself. The Fed is getting bailed out by the Treasury because the Fed doesn't have any money. But then again, neither does the Treasury. So the Federal Reserve has to print money to give it to the Treasury to bail itself out. But all of this means that the dollars that we all hold, I don't hold them because I get rid of them as fast as I get them, but the average American has got dollars, and those dollars are going to buy a lot less as a result of these bank bailouts.
Peter Schiff recently shared his thoughts on the future of global currencies, stating that he believes digital gold will be one of the options adopted by economies worldwide. However, he expressed skepticism about Bitcoin's potential to become one of the leading digital currencies. In an interview with Mike Adams, Schiff stated that he believes the world will eventually move away from fiat currencies, leading to a resurgence in the use of gold for transactions. While Schiff remains cautious about Bitcoin's future, he believes that digital gold could be a viable option for investors seeking a stable and secure store of value.
nobody's bank account is safe. You know, when the government tells you that your bank account is safe, it's because it's not. And the reason it's not safe, it's not because the banks are going to fail. The government has already said, we're not going to let them fail. Now, that's a mistake. They should let insolvent banks fail. That's how capitalism works. But, you know, we don't have that anymore. We have socialism. And so the insolvent banks won't fail. They're going to be propped up with inflation. But what that means is every single bank account in the country, even the people who are banking with solvent banks, their accounts are going to lose tremendous value because the money in their accounts is going to lose its purchasing power through inflation. So no bank account is safe. Everybody with a bank account is going to experience substantial loss of purchasing power. And so the smart thing to do is to withdraw your money from the bank. I mean, your savings, I mean, you got to keep short-term there to pay your bills. But money that you don't need for a year or 2 or 5 years, whatever, don't leave it at a bank because you're guaranteed to lose because prices are going to go way up. So you should pull your money out of the bank and do something else. Buy gold, buy silver. That's a better savings vehicle than fiat currencies, or invest, you know, get into stocks. I buy foreign dividend paying stocks for my clients, value stocks. You know, some people buy real estate, but what you can't own is dollars or, you know, a bank account because you're going to lose.
Gold has gone up substantially since the bank meltdown, but this may be just the beginning of a bigger rally. And as Peter explained in an interview, your money is not safe in the bank and average Americans are going to pay for the bailouts. As the United States continues to battle rising inflation, Schiff warned that the dollar risks being devalued similarly to currencies in countries such as Argentina with the Argentine peso. When the dollar really starts to lose money rapidly, you know, when we're like Argentina or something like that, and then you can't even risk keeping your short-term money in dollars, it's not that bad yet.
So as the dollar is losing value, your account with me is gaining value. So now you'll have more dollars in the future. But you don't want to send me the money that you need, you know, for next month's rent.
Okay.
You know, leave that in the bank. Now, eventually, I think the world will move away from fiat currencies. And I think a lot of people will start transacting in gold again through the internet, through the blockchain, or private companies will tokenize gold. And then you'll be able to transact in gold. You'll be able to use gold to pay your bills because the person you're paying is going to want to get paid in gold.
Exactly.
But that's when the dollar really starts to lose money rapidly. You know, when we're like Argentina or something like that. And then you can't even risk keeping your short-term money in dollars. It's not that bad yet.
Okay.
But even if inflation is 10% or let's say 12% a year, you're only losing 1% a month. So if you're turning your account over every month, all right, it's 1%. It's not the end of the world. But when you start losing 10% a month, right, when you have 120% inflation, now, you know, you got to worry about, you know, the money you leave in the bank overnight. So that's when I think people will start turning to alternatives like tokenized gold so that they can transact in that. Now, I know there's some people out there that think, no, they're going to use Bitcoin. That ain't going to happen. You know, they're not going to use Bitcoin, but they could easily use digital gold or digital tokens that are backed by real gold.
Schiff spoke about his belief that gold will find prominence once again. Moreover, stating his belief that fiat is certainly not the currency exchange for the future, but it also isn't Bitcoin. The move in gold yesterday was not driven by an explosion in open interest. The futures market saw minimal change in open interest this whole week. The gold miners have been consistently leading the price of gold in both directions for years. It was not until the move on Friday where miners finally caught a bid higher. If gold is finally able to leave the 2011 high in the dust and consistently make new highs, then stock traders will have no choice but to buy into the move.
I think the emerging markets are going to do particularly well in a weak dollar environment, which is where I think we're going to be for the remainder of the decade. So I think emerging markets are going to do better than developed markets, and certainly I think all developed markets that are outside the U.S. I think will beat the U.S. So I've got that. Then I think the fund that is going to deliver the best returns, but of course with the highest risk, but I think that, you know, it's going to end up being worth it, is my gold fund, the Euro Pacific Gold Fund, because I think gold stocks are just going to go up 10 times, 20 times. You know, some of them will go up 50, 100 times. Some of these really small ones. But I look at gold as a store of value, as a safe haven, as just an alternative to cash, right? That's what it is. It's money. It's not an investment. But gold mining stocks are an investment in businesses that mine gold. And so, whenever you make an investment and you're a stockholder in a company, you subject yourself to all sorts of risks, market-related risks, company-specific risks, political risks. But if the price of gold does what I think it's going to do, the stocks are gold mines. I mean, they're going to go way up. I mean,
According to a report by Finbold, Peter Schiff has issued a warning to investors to prepare for a potentially larger collapse in the U.S. banking system. Schiff cites government regulations that encourage banks to invest heavily in treasuries and mortgages through favorable accounting, leading to a system-wide vulnerability. He believes that the current state of the banking system is a direct result of bad monetary and fiscal policies. We value your feedback and would love to hear your thoughts in the comments section below. If you found this video informative or entertaining, please show your support by giving it a thumbs up and subscribing to our channel for the latest news and videos. We look forward to seeing you again soon.